Join me as I show you how I save and invest my monthly salary. I do this video every single month and I take you into detail on exactly where my money's going once it comes in from my salary, what savings, investments, emergency fund, things like that, what objectives I've got for that money. Once I've paid for all of my bills and all of my essential payments, the leftover money that I've got, where I'm putting it. In this video, I'll go into detail on exactly what accounts I've got, what the objectives are of all of the different kind of finance elements that make up my saving and investments part of my finances. So I'll show you exactly what my goal is for my emergency fund and how I'm tracking against that. I'll show you what my pension accounts look like. So I've got a couple of different pensions that I'll talk through in detail and show you how much money I've got in those and what my long-term objective is for those accounts, and also stocks and shares ISA that I also have, I'll cover in detail as well. And then I'll bring all of that together to show you how all of those things are helping me plan for my ultimate goal, which is early retirement. So I'll pull together another spreadsheet that I'll show you, which maps out exactly where I'm planning to retire and how I'm planning to get there and what my monthly contributions need to be to reach that. So if you're interested in learning how to save for the future, starting out investing, you want to retire early, or you just want to get some more information on how to set up your finances to help you grow money for the future, then hopefully this video is going to be really useful for you. I've got a spreadsheet that I go through every single month when I film this video so that you can follow along and you can track how my money's growing and how I'm getting on working towards those objectives. But without further ado, I'll pop that spreadsheet up on the screen now and we'll start going through where my money's going for this month. Okay, so you've got the smaller version of me now on the screen, and on the bigger version, what you've got is my monthly budget spreadsheet that I use to basically track all of my finances, the money that I have coming in, the money that I have going out, where it's being distributed to. I do another monthly video where I go into detail on exactly how I budget my monthly salary. So when my money comes in, showing how much of it goes towards fixed costs, etc. So I've done a separate video on that and I do that every month. I'll link April's video down in the description for anyone that wants to check that out. And in that video, I go into a little bit more detail on exactly how this spreadsheet works, kind of the functionality behind it, so that you can just understand where bits and pieces go. But a whistle stop tour for anyone that's new, you're coming to the channel, this is the first video that you're seeing. This is my, as I say, my monthly and my full budget tracker. It tracks all of my finances. So the few tabs that we're going to cover today, budget overview, which we'll start on here and I'll go into a bit more detail on shortly, and then the savings and investments tab, you can hopefully see that I'm underlining along the bottom here, and then also the retirement plan tab at the end, which I'll warn in advance is a very detailed spreadsheet and the numbers are very small, so I will zoom in when we get there as much as I can, and hopefully it'll be clear for you. I know a few of you watch on mobile have mentioned in the comments that it's quite hard to read, so I will zoom in as much as I can when we get to that one at the end of the video. But if we just come back to the budget overview tab for now, so this tab here literally encompasses all of my finances for the month. Anyone that's watched some of my videos before will know that this is kind of the tab that I always start with on the video, and then I come back to at the end once everything's been updated, just to show you any changes. So at the top here, all of these boxes that you see, the 6 boxes, they all relate to content that I film in my monthly budget video. So as I say, go and check that one out if you want to hear about these in more detail. But what it does mean is that I get an outgoings spreadsheet of how my money is split every month across the key different areas. The one that we really want to focus on here is this, I don't know if you can see my cursor there, the S&I, savings and investments one. So I've actually got 40% of my money this month going towards savings and investments. Now that might seem like a lot. In my monthly budget video, I cover a bit of an anomaly point, and if I go to my monthly budget tracker here, you can see that in my income for the month, I actually got a bonus this month. So that was paid to me, so a one-off payment, which meant that, and that money at the moment I've allocated into the savings and investments pot. I'm going to do a separate video on best ways to use and get the most out of your bonus, but for the moment it's sat in savings and investments. So that's just why that number's a little bit skewed there. And then the other core areas that we're going to pay attention to in this video are the emergency fund tab, which you see here, and how much I've got in there, my pension and investments totals, which we'll go into in great detail as well, and then kind of a vanity number at the end, but it just helps me keep tabs on where I'm at, my net worth numbers. So kind of take note of those numbers, and then when we come back at the end, we'll see what the changes are once we've input the numbers. So now we're going to go into the details. So we're going to go over to the savings and investments tab, and this is where I'm going to plot in all of the numbers that I know I need to go in. So there are 3 core areas that I'm focusing my money on that goes into savings and investments on this in this spreadsheet and kind of in my finance plan at the moment. We have my emergency fund, which does really what it says on the tin. All of these are really self-explanatory as we go through, but just as a whistle stop, my emergency fund is a pot of money that I'm saving up to be able to act as literally there as an emergency cash fund should I need it. It's there to cover things like if I were to lose my job, there is enough money, or will be when I'm finished, enough money in this account to cover my bills for roughly 4 to 6 months, depending on roughly when in the year that would be. But if I were to lose my job, this cash fund will help me stay afloat while I look for another job. That's what this section is for. That's why I've been saving heavily. For anyone that's watched my previous videos, I know I've been saving heavily into this, and it will be another month of that this month, which we'll come on to shortly. And then at the bottom, you can see the running total that I'm on at the moment, what my goal is and how much I've got left to save. That is the same for all of these boxes as well. So then if we just cover the middle one, that's my pension, or pensions I should say. There's 2 pension accounts that I've got that contribute to this number. One is my workplace pension, so the pension that my money automatically goes into through salary sacrifice from my employer that I have at the moment, and I have a 6% matched pension scheme. So a few months ago I took the decision to make sure I was maxing that out, so I'm contributing 6% and my company is also contributing 6% to my pension. So that's that section there. Sorry, and the other account I have in my pension is a self-invested personal pension, SIP. That is a collection of all the previous pensions that I've accumulated in other jobs that I've worked in. So I think it was 3 other pension pots I had about 18 months ago. I bought all of those together so that I could manage them from one single location. So when you add the money in my SIP and the money from my current employer together, that gives you the numbers that you see in here. We'll cover that again in more detail shortly. And then finally is my investments one. This is a stocks and shares ISA that I have with Trading 212 that I also contribute towards every month, and I'll go into a bit more detail later in the video on what that account is for versus my pension account and what I'm going to be using that stocks and shares, the money in that stocks and shares ISA for. I'll cover that in a bit more detail later in the video. So if we go back to this side, and now we can start populating the money for this month. So how this spreadsheet works is, if we look here, so for March last month when I did this, I started the month on £5,920 in my emergency fund, and I contributed £500. So very intuitively, this cell at the end adds up the 2 numbers to give me a total of what I'm working to. There is also an interest paid column. Now, so far that interest paid column hasn't had anything in it, but this month is the month that finally we do have a number to put into that column because interest has been paid on my account. So I will add that in when we go through the numbers in a second, but then it will take the add up of those 3 lines and it will give me a total at the end, and then that total also pulls down to the bottom here, and that tells me how I'm tracking versus my goal. So I know that I ended last month on £6,420 in my emergency fund. That's where I was at. So I can bring that number down, which I already have done, to the starting total for April, because that's where I started the month. And then if we go over to my monthly budget tracker, we can look at how much for the month of April I've added to my emergency fund. So if we go down, I have a investments and savings section here highlighted. You can see that I added £500 again into my emergency fund. So all we need to do is bring that over, and we need to put £500 in there. And then that will add up the 2 numbers. So you can see that's now gone to 6,920. The number at the bottom has gone to 6,920, and the left to save has come down to 580. And then a little pie chart that I have at the bottom here just shows me that that number has also got a little bit smaller. So that's adding the normal amount that I pay every month. That's nice and straightforward. The other thing that I had paid was £125 that I had paid out to me in interest for this account for the month. So I can pop that in there. You can see that that number goes up to 7045. The number at the bottom goes 7045, and the left to save comes down again. So the good news with my emergency fund is that because I've been contributing £500 a month fairly consistently now over the last few months, All I've got left to save is £455. So I hopefully, bar any changes or any unexpected costs, should be able to complete the saving for my emergency fund next month, which is really good. And then I'll be able to start channeling that money towards other things. So really happy to kind of be in that position. And then for the emergency fund, just as a last kind of note, I'm working on 4 to 6 months of my fixed costs. And in my monthly budget tracker tab here, I have my monthly bills, basically what I need to pay every single month just to be able to stay afloat. So if you times that number by, I think it's something like 5 now, where it'll be about 4.5 months worth of bills that I'll have saved up there for 7.5 to get that £7,500. I probably will look to continue to keep growing that money a little bit through the year. Like, I'd quite like to slowly keep pushing up towards 8,000, because then I know that 8,000 is 5 months of those fixed costs that I've got. So I might look to contribute another few £100 perhaps towards the later end of the year when I've got some other finance objectives sorted. But in principle, that is how my emergency fund works. So if we now move over to the middle section, and this is where the spreadsheet kind of gets a little bit more intuitive, because we've got both my pension and my investments are obviously what they kind of say on the tin. They are invested sums. So whereas with the cash savings or emergency fund, I've kind of put that money in a bank account, it sits there, it accrues interest, it doesn't lose any money. If you exclude inflation, it doesn't lose any money. So that's kind of straightforward. Whereas with stocks and shares, obviously it can go up, it can go down, depending on what's going on in the world and what's going on in the finance markets. It probably won't be a surprise to say that when I've obviously done the pre-work for this video to look at the numbers that I'm going to be putting into my pension and my investments. Probably won't surprise you to know that it's been a rough month. The time through March, obviously coming up to the start of April, the time of recording, there's been some crazy things going on in the world, and they have certainly contributed negatively to the kind of stocks and shares. The financial markets have been heavily impacted by that. So you'll see in those numbers when I input them shortly. But I think it's a really important point to bring up now, because when you're going on an investing journey, it's really important to make sure that you're aware that your money can go up and can go down, and making sure you've got that fixed point in the future that you are aiming for and that you're aiming to get to. And that point hopefully is strong enough to stop you being influenced too much by the ups and downs of your money over a short period of time. So when I put these numbers in, you'll see that I could have looked at the month of March and my performance and thought, that's really scary, that's not for me, I'm going to take my money out. But I know that I have a long-term goal, which we'll cover on my retirement plan, a tab down at the bottom of the spreadsheet, just down here at the end of the video. I know that I have a long-term plan, I'm in this for the long game, so a short-term bit of pain now is all part of the process, and it won't be the only time it happens across my 20-30 year investment time horizon. So I just thought it was really important to put that note in there, because hopefully these numbers will help you when you see these, and you'll think, do you know what, actually it's all part of the journey, the ups and the downs, and it's all about that long-term goal as to why I'm doing this. So let's get started with my pension. So as I mentioned, I've got the 2 pension accounts. One is my workplace pension, which is my salary sacrifice, and one is a self-invested personal pension that I have collected together all of my previous pensions so that I've got them all in one place. I don't contribute any money to that SIP at the moment. It just kind of sits there. It's just a collection of all those pensions so I can see them in one spot. But my workplace pension consistently has money going in every single month. And then what this spreadsheet does is it brings the number that I was on at the start of last month. So for March, I ended February on 33,416. So that number comes straight down because that's my starting point for March. Then it puts in how much I added through my salary sacrifice for my pension. So that £570 is the 12%, 6% from myself, 6% from my employer. And then here, every month, at the end of the month, I go into my accounts, I add up where I'm at, I put that number here at the end, and then copy the formula down into this section here, and it will tell me how much my numbers grew for that particular month. So I know that I ended this month, just looking at my notes, on £31,833. So you can see when I press enter on that, already you can see that this number is considerably lower than the number we started March with. That's even without the contributions that have gone into there. But let's see what the material damage is, because I can just copy this formula down, put it in there, and as you can see, my pension account this month lost over £2,000. So that is something, I'm very quick maths here, something probably like a 6 to 7% loss over the month, which is big. That is the biggest loss that I've certainly experienced so far on my investing journey. My investing journey started before this. I've just been tracking this since December 2025. But yeah, so a particularly challenging month, but that it seems hard to say that losing £2,000 doesn't faze me, but it doesn't faze me because I know what my long-term objective is. I know that my plan here is to invest as much as I can, as early as I can in my life, to be able to build towards ultimately financial freedom, and where these investments will eventually pay for themselves so that I don't need to work anymore. That's the long-term plan here. So yes, I've lost £2,000 now, and to be honest, I'm probably expecting April to be a rough month as well, as we just see a bit of a rebalancing in general of the finance markets across the board. But I'm hopeful that over the next 20 years, 30 years, this will just be a minor dot on a very long investing journey. And I definitely encourage you to try and think of it in that way as well. If you've got an investing account, certainly you do what's right for you, and if you decide that taking your money out is what's right for you, that's completely your decision. But I just encourage you to think about the long-term objectives of what you want to achieve and how you want to get there. So what that means is I can bring 31,833 down to here, because that's what I'm starting the month of April on. And I know again that my pension contributions were £570.18. So I can also put those in there. And then this spreadsheet is now ready to go for the end of April when I record this video again, which will be just at the start of May. I can put these numbers in and we can see what the recovery looks like. So if you want to see if I recover any of those, any of that money, then make sure you come back to my next video, which I say will be out in a month's time. If you want to subscribe to the channel, hit that little bell that alarms you when I post out videos, then please do click that, because then you'll be able to come back in a month's time and see whether I've recouped any of that £2,000 that I've lost this month. But yeah, so that's my pension investments. You can see down here what my total is. So my total is now £32,403. I'm looking to get to £37,000 in this account this month, which means I've still got £4.5 left to save, which is more than I had left to save at the start of the previous month. So as expected, that number's gone up, and my growth this month, actually my overall investments have shrunk by 4%. So obviously certainly not ideal, but certainly not a travesty. There's lots of time to make that up. And then exactly the same again happens in my investments account over here. So this is my stocks and shares ISA. Now, I mentioned earlier I'd just do a brief explanation on what I use this for. So my stocks and shares ISA is there because my retirement plan currently has me on plan to retire at the age of 55, but I can't touch my pension until I'm 57. The pensions that I've got, that's the restrictions on the accounts that I have. So it doesn't take too much to work out that I've obviously got a gap there. So this investments account, this stocks and shares ISA, which I can contribute up to £20,000 a year to completely tax-free, is what I'm using to help bridge that gap for me. So I need to get ultimately 2 years of my costs, my fixed costs, and my kind of expected living standard covered in this account. So for my numbers, that kind of works out. I'm looking to get somewhere between £75,000 and £80,000, and that would be a suitable place for me to be able to cover off those couple of years and use the money that's in this account. So lots of work still to do in this account, but that's what it's for. The same process happens again with this account. So what I do is put the number in at the end here, what I ended the month on, which again, if I look at my notes, is £4,522.50. So I will put that number in there, and then I can drag this down, and it probably won't surprise you to know that number is also negative. Certainly not of the same scale as the pensions account, but at the same time, this account is much smaller, has much less money in it. So if you look at kind of that number over here where my cursor is, that kind of £33,000 that I was on, I'm losing kind of that 6-7%. If you do the kind of maths, it works out about the same on this account. So collectively across the board, we've lost about 6%. And if you look in these yearly growth numbers, that's where it really shows that these kind of match up. Minus 4.6.5% on the pensions account, minus 4.85% on the investing account. This account is invested predominantly, as in like 90% of it is invested into a couple of a global index fund and an emerging markets index fund. So what those two funds do is capture the biggest companies from across the world, the most successful, highest performing companies from across the world, all into effectively a basket of companies. It's all pulled together into one fund, and then I invest my money into that fund. So I buy shares of that collective fund effectively. And when my money goes in, it all gets distributed to each and every individual company as a tiny portion of how that company makes up the total basket. So that's a really generic kind of level of investing, and a way of investing if you're someone that doesn't want to spend hours and hours researching individual companies, looking at individual finances, balance sheets, working out price to earnings ratios, all of these things, then index fund investing is definitely going to be the way forward for you. So if it's something you've not looked at much, I've got a whole separate video on how to get started with investing. I've got a couple of them actually, so I'll link them down in the description, and do go and check those out. But yeah, so that's where my investments have ended up for the month. So obviously a lot of loss in there because of obvious reasons with things going on in the world. I can pull the 452250 down, and I can start that. And then the last thing to just touch upon on this section is that in my monthly budget tracker, if I scroll back down again, you can see that actually I've got a line here for my Trading 212 ISA. I actually contributed £350 to it this month. So some extra money going into there because there's some debt that I'd managed to get rid of and finally pay off. So I've moved that money across to paying into my Trading 212 ISA. So I can put £350 in there because I know that is what I've contributed. And then again at the end of the month, I will come back, input the final total, and we'll see if we've recovered any of those that lost money there. So that is exactly how my investments work. I've got £1,100 just to flag at the end there as well that I've got left to go in that account for this year as well to hit my yearly target. So all in all, I would say despite some pretty hefty losses in there, still in a good position. Like if we look at only £455 left to go for my emergency fund goal, £4,500 left to go for my pensions goal, and £1,100 left to go for my stocks and shares ISA goal, they're all still really achievable this year. We're only 3 months through the year, into our 4th month now, so all very, very achievable, and I still think I'm on track to hopefully hit those goals this year, mainly through my contributions as well, without even building in some of the growth, because my finances are in a good spot at the moment, which means I can contribute some extra money. So that is really a very whistle-stop tour of where my savings and investments are at. So if we go back to my budget overview tab, you can see that we're already on this section down the bottom here. So my emergency fund has gone up to 7,045 as per the things we've added. My pension investment totals now total £37,000, which means that this net worth has actually dropped by just over £1,000. I think when we started the video, it was on 44,200, maybe something like that. So it's lost with all the money I've contributed into emergency, because my emergency fund gets pulled into my net worth total as well. With everything I've contributed built up, my net worth has just dropped that little bit. I'm still planning though for this number to be £50,000 by the end of the year. So that's the goal for the year. And then lastly, the last tab we're going to cover, and I know that this tab can be quite divisive, I found in the comments, mainly because of how much information is on here. But before I zoom in and just show some of the detail, this for anyone that's not been here before, this is my retirement plan. So what this spreadsheet maps out is taking my obviously the contributions that I'm making to my pension every single month and my stocks and shares ISA, mapping out a journey of what I would need to contribute every month to retire at the point in which I would like to retire. So at the moment, my salary, as I mentioned in my other monthly budget video, is currently £50,000 a year. So if we assume that let's just assume that stays the same. It hopefully won't, but let's just assume it will stay the same for the rest of my working career. I need to get to a point where my savings and investments are earning £50,000 a year for me to be able to retire, because then that means I can live off of my investments rather than my income. So if I zoom, probably best point now is that I zoom in on here. So how this section works is I have a total that I started the year on, and then every single month I put in my contributions, which I'm clicking across here. And when I make those contributions, I highlight them green. I hadn't 920 stands out, obviously, as a bit of an anomaly there. I hadn't actually planned to put 920. It was only due to be 800 this month. But as I said, because I paid up for a couple of those debt things, I increased it to 920. So some extra contribution gone in there. And then every single month I'm mapping out, I'll zoom in one more as well just so it's really clear. I'm mapping out how much I'm contributing. So in May I plan to contribute 800, June, July, August, September, October, November, December, all the same. And then at the end here, the account, this column here, column O, works out what 9% growth would be on that account if I consistently made all these contributions. And then I factor in inflation, because inflation is obviously erodes your money as well. So I put the 9% growth, factoring in the 2.5% inflation, and then that gives me a real life projected total at the end here, so that I'm likely to have for the end of every single year. So currently for me, for my contributions, I'll be on track to be on £48,408 at the end of this year if I can hit that 9% growth. Now obviously you've seen from my previous tab that 9% growth probably is looking out of reach at the moment, but based on where the world is, we're 4.5% losses on my account so far this year. So what that actually means is I've got to grow 13.5% between now and the end of the year. So that probably feels like a stretch at this stage. And also inflation might struggle to stay down at kind of like the 2.5–3%. I've just done this as an assumption across the lifetime of my investments, but it might struggle to stay down in the low. I think it's about 3%. It has been about 3% recently. It's likely to creep up over the course of the year, which means that the inflationary pressure on prices actually erodes this money a little bit, the value of this money a little bit as well. So that's just a summary basically of how that spreadsheet works. So if I'll zoom back out one level just so you've got a slightly more wider view. So with all my contributions consistently across all this time, going down all of the years, if we actually get to the year 2046, that's why it's highlighted in here, which I'll be 53 at that point, I will be earning £50,000 off of my stocks and shares and pension investments. So that is my crossover point, really, which is great because that's ahead of schedule. I'm actually planning to keep going until 2050, which would mean 2050 would be when I can start taking my full pension, because I'll be 57 at that point. But ideally I would be stopping somewhere in here, so road 26, I think it'd be road 2048, which would be me being 55. Then for these next 2 years here, I would use my stocks and shares ISA to pay for my lifestyle if I have been able to retire. I've put a note in here about planned semi-retirement. That's probably an outdated note now since I've built this plan, but that was initially where I was looking to take a step back from mainline work. And then our current mortgage payoff was due to be 2055. However, I need to make some changes to the spreadsheet soon, because we're going through the process of remortgaging at the moment, and our mortgage is looking like it's going to, or we're going to be taking about 3, possibly 5 years off of our mortgage term, which is a great place to be in, because that means that will then, the mortgage time that we're due to pay off our mortgage will come in line for when I'm planning to retire, which means that I won't have housing costs to pay when I've retired from my work, which is really a fundamental for me. I want to make sure wherever I'm living, the house is paid off before I retire. So that really is a kind of whistle-stop tour of how my finances are looking, how I'm saving, investing, how I'm planning for early retirement. If I kept going, just as a note, if I actually kept going beyond that date and I went to 2055, which would be, what would I be at 2055? I would be 63 at that point. I would have over £1 million. But I don't think I'm going to need to go that far. I mean, it would be nice to have £1 million in the bank, right? But I'm not sure that I'm going to be requiring to go that far. So just a little note there on what comes after, and I can make a decision when I get to this point in my life as to if I want to carry on. But yeah, the plan very much is for this budget, this Google Sheet here, to last me for the next 30 years of my life, really, which is crazy to think that this spreadsheet might follow me around for that time. And we're very early in the journey that it's mapped out in. But yeah, hopefully I can contribute £800 a month over the next few months, and we can hit that annual goal. And there you have it. That is how I'm saving and investing my money for the month of April. Hopefully you found that video really useful and just a bit of insight on how I'm moving my money through my finance system, what my long-term goals are, and how I'm looking to put every single building block into place to be able to get there. And hopefully there might be some useful things that you can take from that for your own budgeting system, however you plan your finances. There might be some useful information in there that you're also able to be able to use for yours. But as I say, I film this video every month, so if you do want to keep tabs on how I'm getting on and how my journey's going, then make sure you subscribe to the channel and set that little alarm so you get notified when videos of mine go live, so that in a few weeks time you can check back in and you can see what the last month was like for me, and if I've had any, hopefully, move forward with my investments rather than moving backwards, which has been a little of this month. But yeah, other than that, that's really it from me for today's video. Thank you very much for watching, and yeah, I'm looking forward to seeing you in the next one.